Guys, welcome back to my channel. Today we will discuss morning star candlestick pattern. Trading the morning star candlestick pattern. So first we will see what is morning star candle pattern. A true morning star candlestick pattern is a bullish reversal signal and therefore only occurs after an established downtrend in price. Traders vary on what they consider to be a downtrend. Some require lower highs and lower lows, while others require only a short streak of consecutive lower candlestick. Note: Steven Nelson is the authority on candlestick and has created a proprietary method for defining a downtrend. Many of his courses go into these methods as well as other qualifiers. I highly recommend Steve Nelson for price section. Okay, Forex Morning Star. So this is the actual Forex Morning Star. Okay, this one, the light right or left. Same is the situation. Okay, Morning Star pattern is a Forex is basically a variation of bullish engulfing pattern. However, a second candlestick in this three candle formation must be a low range candle, like a spinning top or doji, not requiring a regular engulfing pattern. This pattern consists of a relatively large bearish candle followed by a small real bodied second candle that is either slightly bearish or a doji, since there are rarely gaps in forex, and then a third candle whose real body falls into a close is past at least the halfway point of the first candle's real body. See the images above. Okay, non-forex morning star is similar. The only difference is that since most other markets gap quite often, the second candle needs to be isolated outside of the other two candles in the pattern. A second candle can have a small bullish or bearish real body, or it can be a doji. The second candle must not be an inside bar. A third candle in a non-forex morning star should open at or below the first candle in the pattern. However, it should not engulf the second candle but leave it isolated. Okay, so trading the morning star candle pattern in the images above, the candles stick of the morning star pattern did not have very long lower shadows or wicks. The risk to reward ratio is best with this pattern when all the lower shadows are short and other than the third candle in this formation closes just above the 50% mark of the first candle of the pattern. Okay, remember your stop should be placed on one pip below the lowest low of the cycle in a buy position. You do not have to include the spread cost into your stop loss positioning. Spread is added to your entry level. So this is one of the images. Bearish price movement. Okay, there is a pullback and morning star engulfs three candles. Okay, like this one. In this image above, you will see a strong bearish price movement followed by a morning star candlestick pattern. As I mentioned earlier in Forex, the morning star usually looks like a variation of the bullish engulfing pattern. In the pattern above, the last candle of the pattern engulfs the previous three candles nearly four. This is a strong bullish signal, but the length of the third candle has diluted the risk to reward potential on this trade. To make things worse, the second candle in the morning star pattern was a dragonfly doji. The long lower wick of this doji means is an even lower risk to reward scenario, yet it is a slightly bullish signal. You will see final thought. I have said many times before, then context is really everything when it comes to candlestick signal. When taken after an established downtrend, trading the morning star candlestick pattern can be very profitable. Some traders use this pattern as their main trading setup. In forex, the market doesn't gap very often, especially when trading the major pairs. Consequently, the second candlestick in a forex morning star pattern should be slightly bullish or a doji. The alternative leads to an inside bar and a third candle with no relevance to the pattern. The third candlestick in this pattern needs to pull into and close at least in the top half of the first candlestick. However, the third candlestick can be larger and it often engulfs the previous two candlesticks or more.